Welcome to the Deep Dive, where we take your pile of source material, the conflicting reports, the research papers, the analyst notes, and we cut right to the core of what you need to know.
And today, we are really strapping in.
We are. We're taking a high-stakes investigation into one of the crypto world's most fascinating, most debated, and frankly, most contradictory assets, Dogecoin.
Contradictory is the perfect word for it. It's the ultimate asset identity crisis, and that's really our mission today. You've given us information that paints two diametrically opposed pictures.
Right. On one side, Dogecoin looks, for lack of a better word, structurally broken. It seems like an aging meme coin that's just struggling to find its footing after that 2021 mania.
And we have hard data to back that up. Technical weakness, really disappointed institutional uptake. It's all there.
And the numbers are just harsh. We're talking about a coin that is down a stunning 74% from its all-time high back in 2021.
74%.
And if you just look at the year-to-date, up until early November 2025, it was down 40%. So if you only look at those traditional metrics, it looks like a textbook example of, what was the phrase in the sources? Speculative dreck.
Exactly. But then there's the second narrative, and this is why we need this deep dive. The idea that Dogecoin is facing 5 massive, imminent catalysts, and they're all converging in a very narrow window of time.
And these aren't just, minor updates.
No, not at all. We're talking about US ETFs, huge technical upgrades like DOGECOIN 2.0, and the potential integration into Elon Musk's everything app, X Money.
And a literal mission to the moon. You can't forget that one.
Right. A literal space mission.
So the mission for you, the learner, is to get up to speed quickly on this extreme tension. We need to sift through this mountain of conflicting data to understand if Dogecoin can actually make the transition from being, a punchline.
A very culturally significant punchline, but still a punchline.
Right. From that to a serious mainstream asset class with real fundamental measurable utility. So we're going to unpack the current state, the fierce competition, and the game-changing potential that could be waiting just around the corner.
And we have to start by confronting the current reality. Dogecoin's structural issues and the formidable challenger that's basically eating its lunch right now.
Okay, so to really understand where Dogecoin might go, we have to ground ourselves in its technical baseline today. And for the last few years, that picture has been one of, persistent underperformance. It's not just that 74% drop from the 2021 peak, which is staggering in itself. The structural weakness is evident right now, today, in the on-chain flows.
And what's fascinating here, and what the sources really zero in on, is that we aren't just observing a price slump that often comes with a market dip. We're witnessing what's specifically being called a distribution phase.
A distribution phase. Okay,
yeah.
That's a critical term. Let's break that down for our listener. What does that actually mean?
It's when sellers start to structurally outweigh buyers. Large holders or whales. They often use these times of relative price stability or maybe small rallies to slowly and quietly offload their positions.
But hold on, doesn't moving tokens off an exchange sometimes mean the opposite?
Yeah.
Like people are moving them into cold storage because they're planning to hold for the long term.
That's a crucial distinction and a really good question.
So why are our sources so convinced this is a bearish distribution phase and not just, long-term confidence?
Well, when tokens move into deep cold storage for holding, you usually see sustained accumulation followed by, silence. The tokens go dormant. Here, the flow analysis reveals what's being called a persistent structural problem.
Yeah.
We've seen net outflows totaling about $1.5 million, while the price was just stubbornly hovering around that 0.1451 mark.
So tokens are leaving exchanges, but the price isn't moving up yet.
Exactly. It suggests the desire to sell those tokens into the market or move them into wallets that have historically been linked to selling behavior. And critically, there are no corresponding large inflows to the exchanges to prop up the price.
So it's like a quiet, steady leak.
That's a great way to put it. This quiet selling, this distribution, makes Dogecoin highly vulnerable to any external pressures. There's no foundational accumulation happening to build a base for a massive breakout.
At least not yet.
Not yet. The big money seems to be persistently, quietly moving their holdings in what analysts see as a bearish sign. And while Dogecoin is dealing with all this, there's a new giant in the meme coin jungle.
That would be Solana.
Solana. It has become the undeniable alternative and, just objectively a better functioning system right now for capturing the upside of internet meme culture.
The scale is just completely different, isn't it?
It's night and day. When you look at the market cap, Solana is more than 3 times as large as Dogecoin's. At one point in the analysis, SOL was valued at $74 billion, while DOGE was sitting at around $21.6 billion. That scale alone tells you where the capital is flowing structurally.
And the growth story for Solana is just astounding. I mean, it makes Dogecoin's struggles look even more stark. Solana launched in 2020, and since then, it has climbed, what was the number? A whopping 23,000%.
23,000%. It's not just a high-speed blockchain network anymore. It has actively cemented itself as the new hub of meme coin mania. It's basically taken the cultural niche that Dogecoin pioneered.
That's the key strategic advantage, right? It's become synonymous with the activity itself.
Precisely. It's low transaction costs. It's high throughput. I mean, we're talking thousands of transactions per second. It just makes it the preferred infrastructure. It's the place you go to quickly mint new meme coins or swap existing ones without getting hammered by high gas fees or slow confirmations.
Which were always the big complaints about Dogecoin's original chain.
Always. And we even saw a huge real-world example of this cultural shift earlier this year.
You're talking about the Donald Trump coin?
Exactly. A major political figure, President Donald Trump, used the Solana blockchain to mint a new meme coin. That's a massive signal. It shows that when cultural leaders want to engage with this niche, they're choosing Solana's infrastructure.
And this activity is not just, internet chatter. It translates into real, quantifiable economic metrics. This is where Solana's utility today stands in such sharp contrast to Dogecoin's potential utility tomorrow.
That's the core of the argument.
Just go to those metrics, because this is where the utility discussion really hits home for anyone trying to weigh these two assets.
Okay, so the Solana blockchain ecosystem posted nearly $3 billion in revenue over the most recent 12-month period.
$3 billion.
In revenue. This shows immense, proven, real economic activity, and it's largely driven by the fees generated from all this meme coin activity. So while Dogecoin is heavily relying on potential corporate integration from the Musk ecosystem, which we'll get into, Solana is demonstrating fundamental utility today.
It's already the functioning railroad for this entire economy.
It is. It's reliably facilitating billions of dollars in economic transfers and cultural transactions. It's hosting the very ecosystem that Dogecoin used to rule.
It is worth pointing out, though, the huge price difference for any new investor looking at these two. A single DOGE coin is still very budget-friendly, right? Around 20 cents.
Sure, very accessible.
But a single SOL coin, that costs a lot more. The sources had it anywhere from $131 to even $200.
That's true, but our sources quickly counter that idea that a high price means it's inaccessible. The emergence of U.S. spot Solana ETFs, which, mirrors the Dogecoin ETF news we'll discuss, it makes the asset more accessible to traditional investment channels.
So that can mitigate the high price barrier for retail and institutional funds.
It could, absolutely. At the end of the day, Solana is capturing the market's attention because it's building a functioning, revenue-generating ecosystem around the meme mania. Dogecoin's fate, on the other hand, rests almost entirely on external, yet-to-be-activated adoption from one very influential backer.
So the stage is set. We have the incumbent, Dogecoin, struggling with these deep structural outflows, while a soaring challenger, Solana, has become the proven infrastructure for the culture Dogecoin created.
Right, and now we have to shift to the extreme, confusing volatility that makes analyzing Dogecoin so difficult in the short term.
Okay, this next section really reveals the chaotic, kind of Jekyll and Hyde nature of Dogecoin's price action over the last few weeks.
It's whiplash.
Total whiplash.
Yeah.
It seems to break down one day and then just rebound the next, leaving even experienced traders completely confused about the real direction of the market. Let's start with that bearish collapse that happened around the beginning of December. It signaled deep structural failure.
It really did. On December 1st, 2025, Dogecoin just slumped. Nearly 9% in a violent high-volume sell-off.
And this happened right after it broke a really crucial support level.
A critical one, 0.14955. That zone was so important because it had been the floor, the consolidation base, for every major rebound attempt since late October. So breaking it marked a huge structural shift from, a period of sideways movement to an active, defined downtrend.
And it wasn't just the price drop that confirmed the breakdown, right? It was the volume.
The volume was staggering.
Yeah.
We saw 1.56 billion tokens traded during that one sell window. That's about 6.5 times the daily average.
6.5 times, wow.
That level of participation signals extreme fear. It's often driven by algorithmic selling or these cascading liquidation events where forced sales just completely overwhelm any buyers. The price dropped vertically straight down to the 0.1370 range.
But then, here's the Dogecoin twist. This is why it requires this kind of deep dive. Just a few days later, on December 4th, it suddenly surged 2.7%.
Right back up.
And it broke through key resistance again, also with strong volume.
Yeah.
The sources called this a rapid reclaim of bullish structure, and it was driven mostly by retail investors looking to buy that dip.
Yeah, the chart analysis confirms this whipsaw action perfectly. The price actually confirmed an ascending channel, that's a key technical pattern, built across 3 higher lows.
Okay.
This pattern shows sustained accumulation right after that major dip. It proves that buyers were aggressively defending key levels. So you have a structural collapse followed immediately by a structural reclaim. It's a huge conflict between bearish algorithmic selling and optimistic retail buying.
So if the market is basically at war with itself, what are the key battle lines for traders right now? Where are the critical support and resistance zones?
We have 2 critical zones that are defining Dogecoin's short-term destiny. On the floor side, the macrostructural floor is the 0.138 region.
And that level aligns with 2 powerful traditional investor tools.
It does. First, the 0.382 Fibonacci retracement. Now, for a listener, the Fibonacci tool is based on these mathematical ratios that traders use to identify potential support and resistance levels after a big price move. The 0.382 level is a classic zone where prices often find at least temporary stability.
And the second tool?
It also aligns with the 200-week moving average, which is a crucial long-term trend indicator.
So when a price hits its 200-week moving average, what does that usually signal to the market?
It acts as the ultimate line in the sand between a long-term bull market and a bear market. If a price stays above its 200-week moving average, the asset is typically considered structurally healthy by long-term holders. So these levels attract serious, long-term buyers who see it as a discounted entry point.
So holding the psychological pillar of $2.13 is just paramount.
Absolutely. That level hasn't been breached in over a year. And for short-term traders, the immediate tactical pivot is 0.147 cents. Holding that level preserves the recent upward breakout structure.
And what about the ceiling? Where's the major resistance that's preventing a bigger rally? What's the story behind that number?
That would be the massive psychological wall at 0.20 cents. And this isn't just an arbitrary round number.
No.
Analyst Ali Martinez pointed out that approximately 11.72 billion Dogecoin were bought near this exact price point over the last year.
11 billion. So that creates a huge psychological and liquidity barrier.
A decisive one. Because once the price gets back to $0.20, all those 11.72 billion coins, many held by traders who are currently underwater, suddenly become profitable. And a lot of them might be sold.
So 20 cents is the point where Dogecoin needs a massive surge of new buying pressure just to absorb all the potential selling from existing holders who just want to get out at break even.
That's it exactly. If Dogecoin can reclaim $0.20 and successfully turn it into a new support level, meaning buyers absorb that supply and hold the price there, it could trigger a significant sustained rally, maybe towards $0.30.
Okay, so let's move beyond the price action. What about the technical indicators? Are they confirming this internal market conflict, or do they give us a clearer picture?
They are absolutely confirming the confusion. They suggest Dogecoin is in the very early, very unstable stages of a potential trend transition.
So mixed signals.
Extremely mixed. We have some significant bullish signals that are hard to ignore. For instance, the TD sequential indicator flashed a fresh buy signal on the weekly chart on December 4th.
Okay, let's pause there for a second. For listeners who aren't steeped in trading terminology, what exactly does the TD sequential indicator measure?
Right, so the TD sequential is a specialized counter-trend tool. It looks for points where a market trend has become completely exhausted, where buyers or sellers are just emotionally spent.
Definitely.
So when it flashes a buy signal, it's suggesting that the selling pressure is likely over and a reversal is imminent. And historically, for Dogecoin, this indicator's buy signal has preceded sharp multi-week rallies, so its recent activation is highly notable.
That sounds extremely bullish, like it could be signaling the end of the long-term downtrend.
It does, and on top of that, the MACD indicator, that's the moving average divergence, it also flipped bullish.
How should we interpret the MTD?
The MACD is essentially a momentum tool. It compares 2 moving averages, a fast one and a slow one, to judge the strength and direction of the trend. When the fast line crosses above the slow line, it's like a car shifting gears. It signals that upside momentum is building.
So both the TD sequential and the MACD are pointing to underlying strength.
Right. They suggest the structural weakness we talked about earlier might be starting to fade.
But the bearish signals must be just as compelling, right?
They are, and they remind us of that underlying pressure. TradingView's bull bear power tool, for example, flashed a sell signal. It indicates that sellers still have considerable influence during intraday swings.
That's the big one.
The biggest bearish structural data point is that the price remains far below both the 50-day and 100-day simple moving averages.
And for long-term investors, the relationship between those moving averages is crucial.
Absolutely. The fact that the 50-day simple moving average is sloping lower and sits below the 100-day SMA is a classic death cross indicator for trend followers. It reinforces a negative trend on both short and long-term views.
So what's the bottom line here?
We need sustained closes above resistance and rising volume to validate those bullish signals. Until then, Dogecoin is structurally bearish, even if the sentiment is briefly bullish.
Okay, let's talk about the largest players, the whales, because their on-chain actions reveal a similar paradox. Are they preparing for a breakout, or are they selling into strength? This is the whale paradox.
It really is a paradox. The on-chain data shows simultaneous accumulation and concerning inactivity. Let's start with the strong bullish case.
Okay.
From early November, whale dresses increased their holdings by a massive 4.72 billion DOGE. That's about $80 million in value.
$80 million. That's not nothing.
Not at all. And this sustained buying brought their total holding ratio to 12.3%, a new high since May 2021. And on top of that, outflow from exchanges exceeded inflow for 7 straight days, which signals that these large, savvy holders are moving it into secure storage.
So they are buying huge amounts and moving the tokens into deep cold storage. That sounds like they're preparing for a major upward movement. So where's the paradox?
The paradox is in the speed of their transactions. Despite the significant accumulation, the number of large whale transactions fell to a 2-month low around December 4th, and that correlated directly with the price drops.
Wait, so they're buying, but they're not transacting. Why?
Analysts interpret this quiet behavior as large holders adopting a conservative or risk-averse position. They are positioning themselves for the next wave by accumulating cheaply, but they aren't actively pushing the price up yet by engaging in large, high-volume trades.
So why the silence then? If they're confident enough to buy $80 million worth of tokens, why aren't they more active in the market?
They're waiting. They're waiting for external validation.
For the catalysts.
Exactly. Their silence suggests they are waiting for that cluster of external corporate catalysts we are about to discuss to actually activate. They believe in the narrative, but they are not willing to put their weight behind the asset until the fundamental utility that the Tesla payments or the X money is confirmed.
So they're laying the groundwork, but they're not flipping the switch.
That's a perfect way to describe it. Their accumulation suggests the groundwork is being laid, but their inactivity creates immense uncertainty for the short term, holding the price down right when retail is trying to push it higher.
Right, this is the section that completely flips the narrative. Because Dogecoin might be struggling on the charts, but it has a stack of external game-changing events unlike almost any other cryptocurrency. Its destiny feels entirely external right now.
It does.
And the first major catalyst is institutional validation through the ETF market. I mean, Dogecoin ETFs are actually a reality, which, given it was just a joke asset a few years ago, the SEC approving 2 of them is just staggering. What does that say about the shift in the regulatory view?
It's a seismic shift, a major historical milestone for the entire altcoin space. The approval of 2 U.S. spot Dogecoin ETFs signifies an industry acceptance that was, unimaginable just 18 months ago.
And what are the 2 ETFs?
We had Grayscale's GDOG, which was approved on November 24th, 2025, and then Bitwise's BWOW, which launched just 2 days later on November 26th. And the Bitwise ETF entered this rapid 20-day automatic approval period, which signals a more streamlined regulatory path.
So this opens up institutional investment channels for the first time. It's essentially moving Dogecoin from a meme coin to an asset class, just like we saw with Bitcoin and Ethereum.
Right, and Grayscale has even listed DOGE as one of 11 alternative coins that may meet the new, more relaxed SEC general listing standards.
Well, we have to address the immediate market reaction because it was a textbook example of sell the news.
It absolutely was. Despite all the hype leading up to the approval, the initial institutional demand was, well, profoundly disappointing.
How disappointing are we talking?
Cumulative net inflows were very modest, only $2.16 million in the first week, and just $2.85 million cumulative by December 3rd.
Okay, let's put that in perspective. When the first Bitcoin ETFs launched, they saw hundreds of millions in inflows within days, sometimes billions within weeks. Is $2.85 million for DOGE a genuine failure or just institutional caution toward altcoins?
It's a bit of both. It fell far short of the expected hundreds of millions, which tells us 2 things. First, institutional capital is still very selective and risk-averse when it comes to meme coins, even with regulatory approval.
And the second thing?
The modest flow suggests that this capital, if it comes, will be a slow, steady accumulation over 2026, not the quick, explosive demand that Bitcoin and even Ethereum saw. The initial burst of capital just wasn't there.
So the institutional gates are open, but the floodgates haven't been released yet.
Not even close. And that muted demand led directly to the market reacting negatively, causing the price to fall 5–10% right after the announcements.
Okay, so the next major catalyst, and maybe the most powerful one, is naturally centered around X and the Everything app vision. Musk's platform is building a payments layer called X Money. How far along is that, and what are the realistic chances for DOGE integration? Because that's what the market is truly betting on.
X Money is no longer just theoretical. It's rapidly becoming operational. The service is in limited beta testing and has been building out the foundational regulatory framework. X has secured money transmitter licenses in dozens of U.S. states, which is critical.
But not everywhere yet.
Not everywhere. Major hubs like New York are still pending.
And what are the core features currently available in the beta?
Right now, it offers peer-to-peer transfers, a built-in digital wallet, and seamless connections to traditional banking through bank or debit cards. The settlement is being handled through partners like Visa Direct. But crucially, the current documentation suggests X Money is focusing on fiat currency at first, dollars, euros, and so on.
So where does the intense DOGE speculation come from if the platform is currently fiat focused?
The speculation is entirely driven by the infrastructure design and by Musk himself. He confirmed the launch, saying X Money comes out soon, and he's been tying XChat encryption to Bitcoin-style encryption, which just intensifies the crypto signals.
But here's the critical piece of context for the learner. Musk has repeatedly insisted that none of his companies, including X, will ever issue a native crypto token.
And that is the cornerstone of the entire bullish thesis.
Because that structural decision to not create a new token means any eventual crypto integration has to rely on existing external assets.
Exactly. And given Musk's cultural attachment to Dogecoin, he's called it the people's crypto. Dogecoin becomes the overwhelming frontrunner for integration. Analysts believe it will be used for social tipping, content monetization, and eventually cross-border payments within the X ecosystem.
Creating a new, massive crypto payment network.
Potentially, yes. And the activation is widely expected sometime between November and December, which aligns perfectly with the current market anticipation.
The third catalyst is even more direct and physical. The Tesla connection. This isn't just speculation. This is based on hard code discovery.
Right. On December 5th, 2025, a Dogecoin Foundation developer discovered new disabled DOGE checkout code embedded deep within Tesla's revamped website.
And this wasn't old code, right?
No, it was new implementation code, explicitly ready for a Dogecoin payment option. And what makes this discovery so potent is that it appears to reference only Dogecoin.
Wow. So no support for Bitcoin or any other cryptocurrencies?
None that were found, just Dogecoin, which, reinforces Musk's historical preference. Tesla already accepts DOGE for some merchandise and has since early 2022. But if they activate this new code for something major, like electric vehicles...
What kind of impact are analysts predicting from that?
Well, it moves Dogecoin from a fun novelty for buying hats and belt buckles to a serious financial instrument capable of handling five-figure transactions. This activation would provide significant, transformative real-world utility.
It would finally move Dogecoin beyond its meme status.
It would. And if it's activated for vehicle sales, even just in limited markets at first, that move alone could trigger a price increase of 50–100%, maybe more. This is considered one of the two key potential game changers that the market is waiting for.
Speaking of game changers, we have to talk about the physical manifestation of the joke, the Dogecoin Lunar Program. This is the ultimate example of the cultural leverage we're analyzing.
It is the literal realization of to the moon. Musk officially announced the mission, a collaboration with SpaceX to send a chip engraved with the Dogecoin logo and code into lunar orbit. The launch window is set for December 2025.
That's a literal cultural space milestone. I mean, we have to pause and just reflect on the absurdity and the profound significance of that.
It's incredible.
A cryptocurrency that started as a joke about a dog is now literally going to space because one of the world's most powerful people just decided it should.
The cultural significance is immense. If it's successful, Dogecoin would become the first cryptocurrency to reach the moon, cementing its position in mainstream culture and driving community activity. We already saw social engagement surge 15% briefly after the announcement.
Now, the source did note that the term lunar program might be a bit of an optimistic interpretation, and it's not fully confirmed by all partners.
That's true, but the announcement and the intent alone are what drive the sentiment. It gives the community a powerful shared rallying point that no other altcoin can claim. This cultural leverage is a financial factor that traditional valuation models simply cannot account for.
Up until now, Dogecoin has really struggled with the perception that its underlying technology is, well, slow, clunky, and limited. That was the core argument for Solana's dominance.
Right.
But this next set of catalysts shows that the core development team is trying to solve this utility crisis head-on, regardless of what Musk does. This is about building internal, lasting value.
That brings us to the DOGECOIN 2.0 core upgrades, which officially launched in early November, and they represent a massive technical breakthrough. The single most important upgrade, the crown jewel of this effort, is achieving full compatibility with the Ethereum Virtual Machine, or EVM.
Okay, for the learner, why does EVM compatibility matter so much for a coin like Dogecoin, which has always operated on its own distinct blockchain?
EVM compatibility is like installing a universal adapter into Dogecoin's engine. The Ethereum Virtual Machine is the computational standard for almost every major application and decentralized finance protocol in crypto. By becoming EVM compatible, Dogecoin immediately plugs itself into the largest decentralized financial ecosystem that exists.
And what does that plugging in actually enable it to do?
It enables DOGE to support all the complex financial activity that was previously impossible. It allows for the creation of sophisticated DeFi protocols, the minting of NFTs, and seamless, trustless cross-chain transactions with assets on the Ethereum network. It's a fundamental, functional shift.
So before, Dogecoin was basically a tipping mechanism.
Right. And now it can potentially become a foundational layer for complex, decentralized applications.
And the performance metrics that came with this upgrade are just dramatic. They basically solved the speed issue that made Solana the obvious choice before.
Exactly. Before the DOGECOIN 2.0 upgrade, Dogecoin's transaction speeds hovered around a sluggish 7 transactions per second.
7.
With the upgrade, transaction speeds soared to a highly competitive 450 transactions per second.
That is a staggering 64-fold increase in speed. Why is 450 transactions per second such a critical number for Dogecoin's commercial viability?
When you're talking about payment systems, speed is everything. A system processing 7 transactions per second is unusable for any large-scale application like X-Money or Tesla vehicle sales, but 450 moves Dogecoin into a realm of feasibility for genuine commercial and retail use.
And the fees came down too.
Massively. Transaction fees were reduced by 90%. This combination of high speed and low cost is non-negotiable for a payment token. It strategically reduces Solana's competitive advantage on the technical front.
And by making it compatible with the ERC20 standard, they're essentially trying to attract developers who are already fluent in the Ethereum ecosystem, right? It's a move to steal developer talent.
It's an attempt to bootstrap a developer community overnight. Developers don't have to learn a new programming language. They can just port their existing Ethereum-based dApps over to Dogecoin's new chain with minimal effort. Compatibility attracts those developers.
So connecting this to the bigger picture.
Dogecoin is desperately trying to shed that speculative dreck label by providing concrete, measurable utility that institutions and X-Money would require for any serious adoption. The technology is now finally ready.
And beyond the core tech, we're seeing signs of growing mainstream acceptance, suggesting the community is ready to actually use these new, faster, cheaper features.
Yeah, the on-chain data supports that. We're seeing widening participation. Dogecoin merchant acceptance is expected to grow by 45% year-on-year by the second quarter of 2025, expanding its use far beyond just Reddit tips.
At the same time, active wallets jumped to over 71,000.
Right, highest level since September. It indicates that community participation is widening right alongside that potential institutional interest we discussed earlier. The technical foundation is being laid, and the community is beginning to respond to it.
So what does this all mean for the person trying to make sense of this asset?
Yeah.
We have a coin that, based on historical charts and those initial ETF flows, looks structurally weak.
Very weak.
But which is simultaneously sitting on top of an explosive pile of imminent corporate and technical catalysts. We're looking at